If you ever took a position, got stopped out of it for no gain, only to watch it rip, go ahead and hit that like and subscribe button. Folks, welcome to another webinar. Happy Friday. We are at the end of the week here, and we have another Strat webinar coming at you today. Today's guest is Dede Edwards. So I'm really excited to bring Dede on board. We are going to explain not only the Strat, but also a little bit how the Strat is different from technical analysis and how you can actually use that in your trading. So the Strat, definitely a very popular trading methodology, one that I'm actually trying to learn myself right now. I've obviously had other Stratters on, and we are excited to welcome Dede Edwards. Dede, are you there?
Hello, Ryan. How are you?
I'm doing well. Happy Friday. How are you?
Oh, I'm doing fantastic. Thank you.
I love to hear it. I love hearing that people are doing fantastic. So again, thanks for joining us. Thanks for taking time out of the day to join us here today. I'm really excited about this. I know we talked about the Strat a little bit a few days ago, and I was just bubbling with excitement. So I want to go ahead and get right into this. First of all, for anyone who may not know you, tell me a little bit about how you got started in trading and then how you eventually found the Strat. I always find those stories interesting.
Sure, boy, do I have a story for you. So thank you so much for inviting me and allowing me to take this time. I appreciate it. I really do enjoy talking about the Strat and sharing ideas with other people who are interested. You know, I started looking at trading back in the mid-90s. I was working at the local sheriff's department and the detective bureau, and one of the guys had pulled out a Wall Street Journal and started reading it. And I got curious about what he was doing. And he said he was looking for stock ideas. And so it piqued my interest. I didn't have any money and hooked up with one of my friends. I said, hey, let's put some dollars together and see if we can figure this thing out. And so between the two of us, we came up with $500 and lost every bit of it. Had no idea what we were doing. I was a student at the time, so I just continued my education. After leaving the sheriff's office, I went into consulting. I worked for one of the big four accounting firms. Mm-hmm. I was a registered representative with one of the popular investment firms. I worked as a Sarbanes-Oxley consultant, and my most recent job was as an IT controller. And during those years, I kept migrating back to trading. It was something that I've always had a passion for, so I just kept digging at it. And in 2005, I actually attended a seminar with Steve Neeson, well known as the person that brought candlestick patterns to the Western world. And so I took that seminar and I found it to be very interesting, but I realized that it didn't really stick. I didn't really grasp, the concept of how to use it to make money. But I actually still have my candlestick flashcards. And so fast forward years later, working at the company, started talking with other very knowledgeable IT guys, Mike and Jim, and they started talking about traders they were following. And I started looking at doing more of that. And in 2018, I was out on medical leave and I said, I need to come up with another plan. And I started researching and found Rob Smith at one of the other trading warehouses. And I started looking at what he was doing. I joined his virtual trading room. I started watching his videos. And in his genius, I realized Rob had taken candlestick patterns and simplified it into the 1, 2, 3s. And for those newbies out there, I just want to show you. So this is what I had gotten from Steve Neeson's seminar. This is a 1. It's probably hard to see, right? That's good. An inside bar. It's a harami. And this is an engulfing pattern. This is a 3. So Rob said, here's a 1, here's a 3. Everything else is a 2. And so then it was a matter of how do you execute based on those trading patterns. So Rob talks about broadening formation. Mr. Neeson talks about, after a long defined trend. So you have to define that. And that's where the broadening formations come in, as you want to see stocks move to a point and reverse. And that's how I trade. So I trade on longer time frames because I want to see those broadening formations and I want to catch those reversals.
Awesome. Well, so first of all, that resume sounds really, really impressive. And it's also interesting to me that despite the impressive resume and the impressive experience, you wanted to come back to trading. It's almost like it was there and you couldn't really shake that feeling. And I think that that's interesting to me because that's exactly what happened to me.
Yeah.
And furthermore, my first account was also $500 and I lost everything. So we've definitely got some common elements there. And I would imagine that there are other traders out there that share the exact same type of experience. So once you found the Strat, was there ever like an aha moment where you're just like, oh, it, like the light bulb goes off or anything like that?
Yeah, it really was. So as I started looking at these patterns, because probably like many traders, when you're first getting started, you're trading these really short time frames, or you're trading in tight ranges and you're trying to figure out why isn't this working. And so I actually did go back to my candlestick flashcards. And when I started reading that, it says a defined trend. So what defines a trend? And that's when I started going back and forth with Rob's in Rob's videos, or either in his VTF. And he always talks about, we like long red and green bars. And I was like, I was trying to reverse a trade in a very tight range and I was instantly getting chopped out. Yep. Or I thought that the trend was going to continue. And so I would enter on an inside bar only for it to go 1, 2, 2 back the other way. And it was driving me nuts. Like, how can I change that? So I had to add a couple other things to my list, because when you're trading the Strat, and I've done all kinds of technical analysis. So I've looked at Elliott waves, I've done Fibonacci, the pivot tables, all of the SMAs or EMAs you can think of, but they don't really tell you what's a good entry point or an exit point. They have their purpose, in terms of helping you with the trend, but day trading, the Strat is the only way for me to go.
Absolutely. Now you touched on a couple of things there. Let me ask you, was your background in technical analysis, or the information, the experience that you had in technical analysis, did that make learning the Strat easier, harder, the same? How does that relationship fit together? Because I'm also cut from the same cloth. I taught myself, the markets and candlesticks and all of that. And for me, like, technical analysis was one of the first things that I learned, and it was kind of ingrained. And when I would learn about the Strat and how the Strat works, I realized that I kind of had to forget about some of the stuff that I had learned in the past. Is that the same experience that you went through?
Oh, it absolutely is, Ryan. And I think the more you have been in and around trading, the more difficult the transition is, because you really have to take a step back and say, I need a clean slate. I need to take all of these indicators off my charts so that I can see clearly. And then once you can see the price action and how stocks are moving, and I have, and we're going to talk about this, my go-to list, I study those stocks because I want to know how that stock trades. And so when you have so many technicals, you really kind of cloud your vision. And so I removed them all for a bit of time and said, I cannot have these on my list. And so, but if you are experienced, or you have been trading for a bit and you're looking to transition now into the Strat, my recommendation is start with clean chart and just look at the videos and look at price action on the stocks you're following, and just see if you can identify those moves when you see an inside bar, an outside bar, and define your broadening formations.
Okay. And I'll say from my own experience, I completely agree with you. One of the things that I was trying to do is I was trying to learn what the different bars are, the 1, 2, 3, the different reversals, all of those other things. And I was doing that on charts that I had a whole bunch of moving averages, and I might have even had like a Fibonacci retracement drawn and all these different levels. and it legitimately made it more difficult for me. So I'm
Yeah.
glad that you brought that up, because I think starting with a clean chart is going to help, especially if you've spent a whole bunch of time on technical analysis in the past. So I think one of the things that we should do now is let's cover some examples. Let's show the viewers a couple of things. I know you wanted to show them the broadening formation, right? You wanted to show them how you trade on EDR, or excuse me, ADR, pardon me. So let's start with some of those examples and we'll work our way through them. Also, just a reminder to anyone watching, if you have any questions, please go ahead and use either the chat or the question and answer. I will do my best to ask those here and cover those throughout the course of the presentation. So Dede, where you want to share your screen here and kind of go through some examples?
Yes.
All right, excellent.
Okay, so let's start. So you mentioned ADR. So let me just kind of explain that a little bit. So average daily range is a plot on your software. And all that does is it's a simple calculation. It's the difference between the high of the day, the low of the day, averaged over a period of time. And I found this script, and so I'm not the genius that wrote it, but the guy that did, this is TradingView, built this script for average daily range, and you can see that with my yellow dots and my white dots across my screen. And what it does for me is it helps kind of define the momentum of a trade. And so I really like this script, but I also draw my own trend lines. And then the next, the only other indicator, so you can see I have those dots, and then I have this red and green lines with the white oscillator, if you will. This is the CCI. This is Commodity Channel Index. A lot of traders use this. You'll find this on any of your software platform or trading charting platforms. I love this indicator because it gives me a great idea of the momentum of that trade for each candle. Different from any stochastics or relative strength indicators, the CCI is unbound, meaning it can go infinitely. So where your stochastics may go to a plus or minus 100 or 20 to 70, this goes to 1,000. It really depends on the strength of that trade. And so what I look for is to short anything where these price action moves below 100 or negative 100 or above, to go long on anything that moves above plus 100. So I'm going to kind of show you that.
Yeah. Sure. So I just wanted to clarify. So do you use that indicator, the CCI, as like an entry and exit signal, or do you use that to determine and then follow the momentum or trend, or a combination of them?
Yeah, combination of both.
Okay.
Yeah, and I'll be able to show you that on the Zoom trade when I did my reversal. So you'll be able to see that.
Excellent.
But I also use it to stay out of trades, because when the market is moving in a tight range, you'll also see CCI moving in between the 100s. So
gotcha. And do you know the name of that ADR script on TradingView off the top of your head?
I sure do. Let me show. Here's my faves. This is the CD _ average daily range zones, and I don't believe Christian is a stratter. I was just searching for the best scripts I could for average daily range, and I just love this one.
Sure. And I just to head this off at the pass, because we sometimes get asked this in these presentations, the candle type script, that is the Crinklebind script that you see at the top of that list there, that is also available. That's what's going to help label your candles for you. It's a little bit, there are other trading platforms that have similar types of scripts. They're all a little bit different. This is the one that was also recommended by Sarah for those candles. So I'm glad that you have the same one. That's excellent.
Yep. And if anyone has any questions about the U's and the D's, that's the next. My buddy John there over at Weekly Stock Charts, he created this one, and it plots the D's and the U's to let you know if the candle is up or down, regardless of color.
Gotcha.
Okay.
Gotcha.
All right. So let's start with Tesla. This is a trade from yesterday.
Tesla.
Yes, Tesla, as Rob would say.
Had to, couldn't resist.
I know. And what this is a gapper. So we're going to start with gappers. I want to talk about three setups that I look for on a daily basis. That's going to be our gappers, our reversals off the 4-hour, and then I look to see if there's any opportunity for swing trades. So we're going to talk about those three things today. And so let's start with our gappers. So I created, and I don't know if the viewers have a good view of my screen here, but I created this little text box here so they kind of see and follow along with me. But what I look for is, and when I first start my day, I'm looking to draw my trend lines on my 4-hour chart. Okay, so I'm going to do that. But just so that people can see what that looks like, I'm going to do a replay with Tesla. And so you can see what it looks like from my view on the first day. Sorry, on the next day that I trade. Let me go one more. Okay, so this is what the candles look like on Thursday, or I guess that was Wednesday. So I'm going to start with drawing my trend lines. So this was a trade that I took yesterday. But this was from the 21st. So I'm going to start drawing my trend lines from the top of this 4-hour candle back to this 4-hour candle. So keep in mind, this was a gapper. I knew it was a gapper because it was in the pre-market. It showed that it was going to open above prior day. So I'm looking for stocks that either come back inside my trend lines or continue once they gap. So I draw my magnitude on my 4-hour, both on the midday. So this was I'm in the central time zone. So this is a 12:30. And then I draw it from the top of that range so the high of the day and the middle of the day. And then if it comes back in, I want to know how far that stock is going to go. And so I'm also going to draw my trend line from the top of the middle of the day to the high of the prior day.
Gotcha.
Okay. And now I want to show you what that looks like on a 5-minute chart. So here was my trend line at the top of the day, top of the 21st. Okay, so that was the high of the day. That's on the 5-minute chart. Here's what that looks like. Can you see that okay?
Yep, crystal clear.
Okay. And so what happened is Tesla gapped up, came back in, went 2-2 on the 5-minute. I like to wait for the market to show me a little bit more direction. It came down, came back up. So I'm looking at this and I'm thinking, and here's how I use CCI and average daily range. The yellow dots represent the top of the range for this new day. So this was yesterday. The white dots represent the bottom of this new daily range. If Tesla trades below these white dots and I get confirmation from my CCI, I'm shorting this stock. And that's exactly what you see here on the 5-minute chart. Just to confirm, I want the 60-minute chart also to be below 100, because if the CCI is strong on the 60-minute chart and it's trading above 100 and it kept going up, and I'm going to kind of contrast this with Snap. You and I were talking about Snap because I want to show that the difference. So if the CCI is above 100 on the 60-minute chart, I'm going to hold here. I don't want to trade this because it's probably triangling out and then going to continue No guarantees. This is a lagging indicator, but I'm going to hold and probably wait for the next 60-minute candle. So in this case, that didn't happen. So Tesla traded below my average daily range, traded below 100 on the 60. So I took that, and this came back inside my 4-hour candle. 4-hour trend line. So that's this line here.
Mm-hmm.
Okay. So this now becomes resistance, and you can see it came back up and failed and trended right down to my next. So these are all my support lines. I drew them here, but you can see them on the 5-minute chart. This now becomes support. It hit it, came back in, came back down, back up. It tried it again. That's now resistance, came back down. And at this point, we're in a new period. So you're at the 930 flip right here. It tried to take the 60, reversed, came back down. It tried it again. I exited the position because CCI never got below -100. It's now trading inside that range, and it's coming back inside the 60. So I exit here when it crosses back over this line the second time.
Okay. Now, so the first thing that I want to say is, number one, I really like this entire setup. And I like this because you're using a 4-hour chart to draw lines, and then you're actually kind of zooming in on your 5-minute chart. And, another mention to the 1-hour chart as you did, but I really like how you did that. I liked how you set it up on a longer time frame. I know you led this by saying you're a little bit longer time frame trader, or you look at longer time frames. So you're kind of setting up your support and resistance on a slightly longer time frame, and then you're zooming in. And when you're actually executing these trades, you're using a quicker time frame. So one of the questions that I get all of the time, I actually got it in an email prior to this presentation, is what timeframes do you recommend? What are the quote unquote right timeframes? And I don't believe that there are necessarily right timeframes. I know that traders always use different timeframes. We can see here the timeframes that you use. Is there anything is there any type of context you can add to why you selected these over other timeframes?
I tell you, and you're correct. It's preference by trader, and it's also risk management. So when you're looking to get started in trading, there's a couple things you have to understand is, who are you as a trader? What's your risk tolerance? And, when I was starting with the smaller time frames and then trying to trade up to the larger time frames, meaning I was looking for signals on the shorter time frames and then expecting that move to happen on the longer time frames, I tell you, I was getting chopped up all of the time. It was difficult for me. You have to be in front of your screen all the time. And I think I mentioned to you, Ryan, I also am a full-time caregiver. So it's a personal preference. I know some guys that do very well trading, 2-minute, 5-minute, 6-minute timeframes. That's just not me as a trader. And so that's preference. But you also want to understand your risk tolerance, because I do trade longer time frames, and my stock selection is a little bit more volatile. I take on a little bit more risk, but I also have a lot more reward. And so when you're setting up your charts, you want to think about what time do you have to sit and monitor the stocks throughout the day. You want to think about what your risk tolerance is, because if you don't have an appetite to see stocks go against you in a 60-minute time frame, then maybe you want to trade a lot shorter time frame. But the key is, when that stock starts to come back in and move inside that previous range, whether it's a 5-minute chart or a 60-minute chart, you have to be prepared for your exit strategy. The name of this game is risk management, and the better you are at managing your risk, the longer you'll be able to stay in the game.
Yeah. Okay. So right there, I think that's gold. I think pretty much what you said there is gold. You hit on three things. You got to know yourself. So you got to know how you're going to trade, what kind of time you have, and what you're looking for. You mentioned risk management, which is going to be important no matter what you trade and no matter when you trade. And so to me, those two things right there are some of the biggest battles that I see traders fail with on a regular basis. It was what stopped me when I first started. I didn't understand what I was trying to trade. I didn't understand what I was trying to achieve. And then you also finally mentioned having a plan at the end. So these are all things that I preach, and I can't say it enough. So thank you very much for confirming exactly what I've been telling people for years now. So really appreciate it.
Sure. Okay, so I take the profit on this and this trade is done. Now you could have reversed this once it came back up on the 60, but I didn't take that trade. So this is really about how do I trade gappers in reverse? And that's the way I would do it using my 4-hour trend lines with confirmation of the average daily range and the CCI. I didn't know if there was any questions regarding.
There was the one question here is, can you repeat how to draw the line on the 4-hour time frame?
Okay.
And just as a reminder to all of the viewers, there will be a recording of this. So if we cover something a little bit too quickly, don't despair. We will be able to give you a copy of the recording where you can go back and play it at your at whatever speed it is that you need in order to pick up that information.
Exactly. Okay, so again, think about this in terms of your setup for the day. So yesterday, I was thinking, okay, Tesla may come back into range. Why? Because it had a gapper. So sometimes gappers, stocks gap and they continue. Sometimes they gap and they reverse. So I look for or wait for stocks to kind of open up after the gapper, first 10 to 15 minutes, and then I look to see which direction it's going to go. But before I start my day, regardless of what I'm trading, I'm drawing my trend lines on the 4-hour chart. So I start from this back half of the prior day. So this was 12:30, I'm in Central Time, the back half of the prior day, and I draw it to the previous day. Okay.
And remember, folks, those are 4-hour candles.
I'm sorry, Ryan.
I was just reminding the viewers, those are 4-hour candles. That's why you actually skipped that middle candle and went back to the other candle that had the D on it.
Yes, these are 4-hour candles. And then, so I'm drawing that now from the top of the day to the high, from the high of the day, the high of the prior day. And then I want to know if the stock comes back into the previous range. So meaning if it gaps up and comes back into yesterday's high, how far or what's my resistance or support level once it comes back into range. So that now becomes my next candle that I draw. Okay. And so I'm drawing that from the high of this middle candle to the high of the prior day. So this now becomes my broadening formation on a 4-hour candle.
And real quick, Dede, do these 4-hour candles include the extended sessions, the pre and post market, or are they just the regular hours?
No, these are just regular hours, update at the bottom of the hour.
There you go. Great question, Maruti.
Okay. So does anyone have any other questions about how I drew that, or is that clear?
That is pretty clear. I think we've covered it twice. Again, I think if we need some more clarity on this, we can ask some questions at the end. And remember, there will be a video replay so you can rewatch that segment more than once. So thank you, Dede.
You're welcome. I'm not going to get into a lot of detail about Snap, but what I want to show here is the contrast between what happened with Tesla yesterday and the trade with Snap on the 21st. So Snap gapped up. You can see that huge gap up and it continued versus Tesla gapping down and reversing. And so if you look at the 5-minute bar on Snap, you can see where it gapped up above my average daily range The CCI is well above 100. I think it was about, let's see, and 450, 445. And it triangled out on the 5-minute, and it continued up and broke above the average daily range. Here's where I like average daily range, when it's beyond my previous day's broadening magnitude or broadening formation, because when you look at Snap, it was trading in a tight range. This is a daily over here to the far right, your left maybe, but the far right of the screen. There was no trend line to really draw to show Snap coming back into range, because it gaps so high above it. And so what you'll want to see is, does Snap stay above the average daily range? So that's my next indicator. So I looked at that. Here was the gapper here. And I said, this is trading above its daily range, and it's way above CCI. I was looking at the other date. And you see it gapped above, it traded above the high point of the average daily range and continued. So I would take that trade above, this is a 5-minute chart, I would take that trade above this inside bar here, trade it up, I would hold it until I got an inside 60. And you could see Snap kind of came in on the CCI, but look at your 60-minute. That is a strong 60-minute candle. I'm not reversing Snap here.
Those are those big bars that you were saying you were looking for at the beginning.
Long green bars.
There it is.
So I would not try to try to short Snap here. It's trading well above its average daily range, its long green bar, and my CCI is still above 100. I would try to go long here and maybe exit here as it came back in, but as you can see, it kind of got a little choppy after that. Okay, so that's my gapper review. Any other questions on gappers before we move on to my 4-hour reversal?
I think we're ready for the 4-hour reversal. Let's do it. Okay.
So here's my 4-hour reversal. This is an intraday reversal. I talk a lot about this, you know, in my post. And so I get a lot of questions. I chose this particular day. This is actually September 23rd for a reason, because it's sometimes tricky to get into these reversals midday when you've had a strong up day, and you can get triangled out. And I'll show you how I trade this. Let me do the replay again on a second. So let's replay here. Okay, good. All right, let me draw the replay on here. Okay, so this is what I see the morning of September 23rd. This is a 3-2 up on Zoom. This is my 4-hour candle. So the first thing I want to do is draw my trend lines. And so I'm going to draw this from the top, and you can see this is an outside bar, but the high of the day was here at 494.90. So I'm going to draw here. Back to this point, to that point. Okay. And so you may say, well, why did you do that? This is the beauty of the 4-hour trend line. This is the same day, but I will draw my trend lines if it's higher. If I got a higher high within that day, I'm going to draw my trend lines on the same day. So the top of that trend line back to the opening. And then we'll do this again here. This is a 2 up, so I'm going to draw from the top of this line, 460.69. Oh, sorry, 470, back to the high here. Okay, and so I'm simply waiting to see if there is a reversal on this, because it's a 3-2 up. What does that look like? All right, so let's go forward. Zoom goes up and it goes way up. You can see here, it came in, went 3 down on that inside bar, but my 60, again, was above 100. So I'm not going to short this here. You're going to take this trade long. If you entered here, you could have entered right here off of this 5-minute bar. I did not take this trade long, but you could have entered there. And let's move it
on that 5-minute bar that you were just talking about entering. Does the CCI play into your decision on entry?
It absolutely does. So you can see here it came in. This was the first 5-minute bar in the candle. It went 2 down, and that's where it went 2 down and took the 4, right? The 4-hour chart. It went 2 down at the open and came straight up and went 3. It hit my magnitude. So this is my magnitude at the top of that 4-hour chart. It hit my magnitude and it continued. And now it's bouncing around here along the average daily range, the top of that range, but it never comes back into the 4-hour chart. So this is my trend line on the 4-hour chart. It closes this trend line, continue up. You could have taken that, held it, and this would have been your stop right here, the low of this candle. Held that, made a ton of money because it went from 498 over here to 529. So you could have made a ton of money. And then as it started to come in here, you could also see the 60 minutes. See how the 60 minutes starts to weaken and the CCI starts to come in? But you have this shooter here. And some traders would have shorted right here on this 1030 flip. But CCI is still strong. This is a huge candle to overcome. So I'm not going to trade this here because you're still inside the 4-hour chart, right? So I'm waiting, and this is how I use my 4-hour flip, as I call it. I'm waiting until it flips at 12:30. Again, I'm in Central Time. I'm waiting for this move, right? So for this move to flip on the 12:30, and you can see CCI has now come in. It's given me a little confidence, and I'm looking for the right entry. So I'm waiting for this entry. CCI is still above my low level. So the negative 100 on the 5-minute chart, I'd like for that to go below. Here's where I enter, right here. Inside 5, and that's at 12:55, so 5, almost at the top of the hour. I take this short here, and I let this trade down to average daily range. This now becomes support. It hits that, comes back in, and comes back in, comes down again. You could have taken that trade again. I exited it here.
That's amazing. So you have an entry, just from what you just explained, you have an entry on the chart, you have an exit on the chart, as well as a stop loss on the chart. So you have the complete makings of a trade plan based on the price action here. That's phenomenal. We did get a quick question here from Scott. What are the CCI settings? 20 periods? Do you have any specific settings for your CCI indicator?
I don't change that. It's default. And I believe it is 14. Hold on, let me see. No, it is 20.
It is 20. Okay. There you go, Scott. Is ADR the same as previous day high or low?
No, it is not.
So there you go.
Average. It's calculating the highs of the days. That's basically the difference between the highs of the days, the lows of the days, averaged out over a period of time. And this gentleman wrote the script, and he has a 5-day and a 10-day. I only use the 5-day.
Okay, thank you.
Mm-hmm. Okay, any other questions regarding my Zoom reversal? So I'm trading these reversals, looking at, you know, the midday reversals at 12:30. Now you certainly could have a reversal before 12:30. This is really how I would trade if the first 4 hours of the day is a strong 4 hours. Now, if this turns at 10:30 and this 4-hour candle goes red at say 9:30 or 10:30, 11:30, yeah, I'm looking for reversals there too. This was just to show, because I get a lot of questions about my 4-hour to flip, is how I would look to trade that after a strong move.
Okay, so you're just to summarize, you're essentially waiting for the flip on the 4-hour, and then you're looking at the price action on the 60 or the hour?
That is correct, to come inside my CCI. We need to see CCI break down to show that the momentum change.
Okay, awesome. So yeah, if you have any questions about any of these strategies, go ahead and drop them in here. I do have one question. It's not specific to this particular strategy. Paul asks, how many stocks do you track on your watch list?
So I have a go-to list, and I have what I call my swing list. My go-to list is about anywhere between 15 and 20 stocks. I may rotate some out if they fall out of favor, if you will, meaning that the market is up and they're just moving sideways. But the swing list, now I use TrendSpider for my scans, and that swing list, when I scan my stocks, I'm looking at inside days or inside weeks. That list could be 50, 60 stocks, but I'm not monitoring those on a daily basis. I'm not scanning for those throughout the day. I do my scans early because after I've looked at what the market is doing. So I start with, I read the news. So I'm looking at Bloomberg, I'm looking at Benzinga, I'm looking at Seeking Alpha, I'm looking at Market Watch. So and CNBC, I'm looking for news, finding what's moving, what's not moving, because gappers are your friends. We like trading gappers because it creates volatility in the market. And then I start looking at the futures. Are they muted? Or, you know, we have gap ups, gap downs. I want to see what's happening. And then I scan using TrendSpider first in the morning, my inside days. And then I start plotting them here on this chart you see here to see what it looks like on the weekly, the 2-week, the 3-week, and the monthly. Because I want to see if this is an opportunity for me to day trade it, or if this is something I want to swing.
Okay, awesome. And I did get a question. You just touched on it, so I just want to circle back here. I did get a question via email prior to this presentation asking, importantly, time frame continuity for day trading the strat is the daily 60, 30, 15, and 5. Only that means there's no need to consider the weekly and the monthly. And you just answered that. No, you absolutely consider the weekly and the monthly. In fact, it looks like you've got several weekly charts here, 1 week, 2 week, and I think a 3 week.
Yeah,
right there. So I think that one of the things that gets lost here is that the time frames, there's not necessarily a set right answer, right? I mean, pretty much every strategy I've seen will use the daily and the weekly, or in the 4-hour and the 1 hour. But I mean, like you don't necessarily, there's not like a cookie cutter response to this, right? There's not just one right answer.
No, again, you know, we talked earlier about what kind of trader are you, and, you know, being able to identify what timeframes work for you. You absolutely have to have multiple timeframes. And so I think a lot of traders, as I tweet out and I talk about my 4 hours and thinking that my entries are 4-hour entries. No, you have to define what your magnitude is. What lane do you want to be in? And really, you know, become an expert at it. And that's what I've tried to do. I stay in my lane. I see a lot of guys trading on different time frames. I find out what works for me, and then I make it my own, and I've just become this expert. And so I've been able to stay in this game by trading 60-minute reversals. And yes, I do pick up some continuation patterns, with my strength on my CCI. I'll look for those as well. But I'm typically trading at the open and at midday. And so if the trader is looking at, just 5, 10, 15-minute time frames, and you're stuck inside a 2-week a bar, you may be getting chopped out in that. So you want to understand various time frames to make sure that it's a good trade to be in. Otherwise, you have to be very clear and have your broad formations well defined. And as my girl Sarah would say, use OCO, one cancel other, so that you have your order entry, your stop entry, and your take profit entered at the same time, so that, because the market just moves way too fast if you're not prepared for the exit.
Yeah, absolutely. Absolutely. So I got another question here. I think this is a good one. Is there anything that we can substitute for ADR, like ATR, which stands for average true range, or VWAP, which stands for volume weighted average price, if we aren't in trading view? So I think one of the issues that people are running into is that a common indicator or study in your trading platform is going to be average true range, ATR, and you're using ADR. So is there anything that you can substitute? Is there a reason you chose ADR over ATR? And I apologize if all those letters sound the same.
No, and there is a difference, but here's going to be the challenge. So let's just start with what the difference is between ADR, average daily range, and ATR, average true range. Both of them will do a calculation based on the day's highs and the day's lows and average them over a period of time. True range, average true range, also includes gappers. Now, why is that significant? If Snap gaps, as an example, and does not trade back into the prior range, when you're looking at average true range, it's going to take into consideration the range from the prior day, and including that distance between the gap and the high of that close. Where average daily range is not taken into consideration the gap, which is why I love the way this guy wrote this script, is because he's looking at the average of the prior days, so the last 5 days. So after the stock gaps, it's still calculating what the price movement would be based on those average 5 days. So now you're looking into, it's almost like it's it is a new day, but it's a new range, but it's not considering the move from the gap up or gap down. Now, okay. Is there something to substitute for that? I don't necessarily think so, because it really is that calculation that makes the difference. And this script that he wrote, and quite frankly, I just was thumbing through scripts on TradingView and found it. But when you're scanning, you won't find this. This was a specific script that he wrote just for this purpose, to define the ranges for a particular trade or a particular stock. So VWAP is an average, and it moves along with the trade as the day goes along. This is fixed, right? So it's a plot on the graph. It's not like a moving average. So I don't know if anyone, I don't know how we could write, if TrendSpider or any of these other charting platforms someone can build a script to do that.
I'll without knowledge of actually how to build these scripts, I'm going to go ahead and tentatively say yes, they can. While we were explaining that here, I went ahead and I Googled average ADR script for Thinkorswim, and I've got one here. First of all, with most trading platforms, you can add scripts in. TradingView is not the only platform that you can actually add in custom scripts. Thinkorswim, which is what was in the original question here, that is definitely a platform where they allow custom scripts. They have a custom script editor built in, and you can actually Google those and find them online. Now, one of the things that I will say here is that without knowing like the actual calculations, they may be slightly different, but I'm really glad that you explained what the difference was between average daily range and average true range, because that'll give you an idea if the script you find is actually going to work for you or not. So it really depends on what broker you have. Definitely look around. It took me less than 10 seconds here to Google ADR script for TOS, and I found one that's available for free. You literally just copy the code and paste it into Thinkorswim. So don't let that stop you. Definitely give that a try. And like Dede mentioned, the script that I'm looking at here is in fact fixed, and it looks very much like these dots, except it's drawn with a line instead of a dot. So I hope that helps, and I hope that answers your question. And pardon me, Dede, if I'm just going through the list of questions here. If I cut you off, please let me know. We can go ahead and continue.
Yeah, no worries.
Okay, and so Jennifer was asking, could you repeat quickly what script CCI use you get if you have a chance? I believe you just used the default CCI script on the default length, which was 20. Is that correct?
Yes, CCI is an indicator. It's available on any charting platform, and I just use the default.
Correct. I've actually used CCI within Benzinga Pro has TradingView integrated into it.
Wow.
So if you're familiar with TradingView, you're certainly familiar with the tools within Benzinga Pro's charting ability. The only caveat there is that with our offering, we can't yet include custom scripts. That's definitely something that I'm pushing for. I hope to be able to do that in the future. However, with that being said, CCI is absolutely a part of that, and you can change some of those settings. Meaning, which CCI? So Jennifer, which CCI? I guess I'm not sure what you're referring to. Dede, it was the commodity. What did it stand for again? Commodity
channel index.
Commodity channel index. So if it's written out, you should be able to see that, Jennifer. And so this one, the commodity channel index, this is not a custom script, right? This was just included in TradingView.
That is correct.
Yeah, so there's no author for that. It's not one person that created that. This is just a very common indicator, like Dede mentioned, that is in a whole bunch of platforms.
That's correct.
All right. So as far as stop losses go, I know we talked a little bit about that. You outlined how you came up with your stop on one of the examples there. Steve had a question that's related to stops that says, do you prefer hard stops or mental stops, and how do you use them? So I think what he's asking here is, do you actually program your order to just get stopped out, or do you just remember where that point is and then exit the trade manually when that approaches or when that hits?
I do both. I do both. A lot of times, if I think it's going to move, I'm going to enter my stop and then I'm going to trail that down. But if my confidence level is not very high, I'm sitting there and I'm monitoring that thing. If it turns on me, and I do trade some custom timeframes, if it turns on me, go two back the other way, I'm going to exit that trade.
Okay. Okay, awesome. I think you covered this. Jeff's asking, how do you use CCI for reversal and the continuation trade?
I'm not sure I followed the question. So when we're looking at Tesla, we kind of compared and contrast that with Snap. When we looked at Tesla, we looked for CCI to come back in on the 60. So in this case, it never crossed above. I think it did cross above, but it came back in because CCI is going to, it moves with price action. So it'll adjust with price action, but it is a lagger. So it came up and came right back in. So I want CCI to be below 100 on the 60 and above negative 100. So it depends on which direction you're going. So on a reversal, like this is Tesla here now, you can see, and this is real time, but it's still inside 4 hours. This is an inside 60, it's coming back in, and you see CCI coming back above -100. Let's look at that on the 5 minute, and you can see it's above 100. There's some strength on this reversal here, but it's starting to kind of fan out. Yeah, I have to
so depending on the trade setup, you're effectively waiting for this to cross above or below the 100 or the -100 level. Is that correct?
Above, long above 100, short below -100.
There you go. And those are your numbers for the CCI. So Mike, and there was another question, Mike and Jeff, hopefully that answers your question. Another quick question here from Sunday. Do you ever consider volume when finding your trade setup?
Never.
How about that?
I don't use volume at all. But the reason I don't have to because of CCI, and when I do my scanning, I have criteria that I use, and volume is included in that. So here's where I do use average true range. I use that because I want stocks that move. So when I'm scanning for, when I'm building my list, so this is different from daily range, but when I'm building my list of stocks, I actually have a scan and trend spider here, and this would be my script, my template. So I'm looking for stocks that have an average true range of 5 or more. That's going to tell me how much that stock moves. I want at least a $5 move in my stock. And then I have price above 100, but below 600. So that's the price range of the stocks that I'm looking at. And if I'm long that stock, I want my CCI in the daily chart to be above 50.
Okay, and Sunday says that's interesting. I agree. That is interesting. Was there any rhyme or reason to those the price maximum and minimum of 100 and 600?
Yeah, I find that, when I'm trading highly volatile stocks and they're really expensive, their spreads tend to be quite wide as well.
Yeah.
So I just look for stocks within a 20 cent to 35 cent maybe trading range, or lower, below 35 cent spread.
Okay. Another question that we got here, and just as some administrative stuff, we've got about 3 minutes left here, so I'm trying to run through the questions as fast as I can. Again, if we go too fast, there will be a recording, so please take advantage of that. Mark is asking, for the broadening formation you draw on your 4 hour, do you do this for all your watch list or just the gappers? So I think he meant to say all the stocks on the watch list or just the gappers.
Okay, so I have a go-to list, and I mentioned that's about 15 to 20 stocks. I draw this for every stock on my go-to list because I watch them every day. And then any stocks that I add to my list for the day, I will draw the 4 hour trend lines. So if the stocks are gapping, or if I run my scan and I say, this sounds like something I may want to look at for the day, I'll draw the trend lines on those.
Okay, awesome. Mark, I hope that answers your question. Jeff, just as a follow-up, do you have an example of a trend continuation trade?
Sure, I can find one. Let's see.
You're welcome, Mark. And then while she's looking, we had another question here, is how and where can you learn to trade the strat? Is there a formal course? I don't know if there's one formal course, but Rob has released a ton of information. Dede also has a blog, right, Dede?
I'm working on it.
Working on it?
And I know I mentioned that before, but I got so much going on. I'm in the process of relocating, but it is coming to a site near you.
Okay, so just to go back and answer the question on is there a formal course, I would recommend the Facebook group. Rob's also on Ticker Talker. We actually have a strat room in Benzinga Pro where we discuss the strat as a strategy, and then also setups and points. Rob posts in there, by the way. And then there's also a whole bunch of different articles where he explains price action and price discovery and all of that. So I don't know if there's a quote unquote formal course, but there's a bunch of material that you can find out there. Like I mentioned, Facebook, Ticker Talker, and our room here in Benzinga Pro, as well as Twitter. Obviously, a lot of these stratters are on Twitter, and they give away information every single day. So there's definitely plenty to consume there.
I'm going to show this Tesla,
Okay.
but I didn't get a chance to go over our swing trades. And I think we're about out of time.
We are.
Yeah.
We can go for another five minutes here if you want.
Okay, real quick. I think Jeff asked about a continuation pattern. This was Tesla on a gapper with a continuation. Gap came down, but if you see here how strong the 60-minute CCI is on this candle, someone may short this here, but look at it on the 5-minute, very choppy. So I don't trade this. I wait until the inside 60 and look for a continuation because the CCI is well above 100. And so if you look at your ADR, you can see on the prior day, it held the prior day's high. So there's some support there. And then I'm looking now for this to up on the 60. Here's the 10:30 flip, again, Central Time. This was the high of that bar, but you can see CCI coming back in. There's some choppiness. I'm not trading this until it breaks here, back above my CCI. I'm taking this long here.
Awesome.
Okay. And let's just talk about, and this will be real quick. I just want to give you guys my setups for the swing trades because I get some questions about that. I look at the 1 week, 2 week, 3 week, and monthly charts for my setups, and I have some notes here. So because this is being recorded, you'll be able to take this with you. But the timing of your trade, if you have to think about, when you think about swing trading, if you're trading options, you understand time matters, right? So if you lose time decay, you're going to lose money in your option. I trade vertical spreads, so either vertical calls or vertical puts. And I'm looking for a trade using my 2 week and my 1 week inside bars or 322s with confirmation on my 3 week. And again, you see, I still use my CCI on the longer time frames. I want to see that momentum is continuing because again, I'm using monthly options. I generally stay away from the weekly options because again, I'm looking at the 2 week and the 1 week. I traded Okta a few weeks ago off this inside, off the 322 here. You probably could have taken this 122 up. I did not trade this, and let me tell you why. The 3 week chart, I want the 3 week chart to be aligned with my 1 and 2 week charts. So I'd like to see this come back in first before I make this move up. And you saw that here in this candle. With confirmation though, I want CCI to be up and I want this candle to go up. So I waited until here to take that move, which was this candle, the top of this candle. It came in, I did a vertical spread. And the way I do this is I'll take I'll go at or near the money, or just inside at the money or just inside the money and call, and then I'll buy at or inside the money call, and I'll sell out of the money call that is close to, in this case, the top of my 3, and I'll hold that trade until I'm maybe a week before expiration. And in this case, I think I took about a 75% return. But I look
Not
for,
too shabby.
yeah, I look for inside bars on the 1 and 2 week with the 3 week confirmation. I would not short this going 3-2 down because it's still pretty strong. But as you can see, what I'm looking for now on after the election, the monthlies, to see if these monthlies break below my CCI. They break below my CCI in the monthly, I'll be looking to short some stocks.
There you go. All right. Well, that is awesome. We are definitely out of time. Dede, I really appreciate the extra time that you gave us today. Not only did you give us time out of your day, but you gave us extra time as well. Thank you so much for joining us. Viewers, thank you so much for joining us. Just a reminder, there will be a replay available in case you missed any segment of this. It will be available on the Benzinga Pro help site for Benzinga Pro users. I'm also going to share a public link with Dede that Dede, I'm assuming you're going to share it on your Twitter or something like that.
Absolutely.
Okay, perfect. And if anyone needs anything, you can always reach out to me as well. Keep an eye out for Dede's blog. Dede, again, thank you so much. This has been so helpful. I gotta say, I saw on a tweet earlier, you said that this is your first ever webinar. Well, you fooled me because you are excellent on these things. Please keep it up. It's very, very easy to understand and learn from you. I really, really appreciate it. So thank you so much, everyone. And until next time, remember, folks, happy trading.
Thank you. Bye-bye.